Thank you for coming back. Hope you had a nice lunch. We're going to start with a panel discussion. How to accelerate Insurtech adoption at scale. We noticed that virtually every insurance company is investing in Insurtech, but only few really succeed in deploying it at scale. And basically that's also what we want to address today. Whether it's externally, gaining real market share with new innovations that are based on Insurtech, or even internally, making sure that Insurtech is really part of the primary process and part of the culture. So what are the barriers? And more importantly, what are the learnings and success factors? And that's what we would like to address in this panel discussion. We actually invited 3 executives from various geographies and with various background to share their view and their experience on that. And that's from right to left. Andrew Scott of Vitality, Vikas Chhariya from AXA Group, and Michael Lebor from Amtrust. But maybe we should first do a little round of introduction. Can I ask you, Andrew, to...
Sure. Thank you, Roger. So I lead an R&D lab for Vitality in the UK, focused on innovation and product development, and I've spent a long period of time with the Discovery Group, originally in South Africa, then internationally in China, the US, and now the UK.
Vikas.
So I'm leading the global effort for the AXA Group worldwide, building disruptive partnerships in the digital and sharing economy, essentially based out of Paris. But the scope of the work that we are doing is global. So at the one end of the spectrum, we are looking at sharing economy, fintech, pure play e-commerce players, and other emerging social network platforms.
Michael?
So I'm based in New York. I actually have 2 related but distinct roles. I'm the Chief Marketing Officer of the company, which is, I think, very easy to understand. We bring technology and the pure, true digital marketing platforms that relate around search and marketing automation and bring those best practices to bear. And then I also am the SVP of Strategic Innovation, which is a much tougher, broader role to define. But it's really trying to take a relatively young company. A lot of companies, AXA's been around for what, over 100 years? I mean,
30.
Yeah, how many?
30.
30, okay, that's 100 years.
Yeah.
We're relatively new, but to take and meet all the different Insurtechs and bring them into our platform and ecosystem and how we could take best advantage.
Thank you. Andrew, to kick off, can you share a bit about Vitality?
So Roger, I guess the genesis of it is something that we all recognize in our own behavior, that when it comes to decisions about our own health, we tend to behave very irrationally. On an intuitive level, I guess we know this. You want to go for that run, but you tend not to do it. You want to avoid the pastries at lunch, but you tend not to do it. And behavioral economic science, I would say, over the last decade or the last 15 years has really expanded our knowledge of why we have those cognitive biases. And it's pretty fundamental, I think, to the way we are. And our insight is that insurers, along with governments, are probably the major stakeholders in society that actually have a vested interest in making people healthier. So Discovery set out with what was originally almost a kind of a lofty vision for a startup company 25 years ago, which was to make people healthier and enhance and protect their lives through insurance. And that's now grown into an entire business methodology where we have a track record of actively promoting health through a systematic program where you get points for doing healthy things, you earn a status, you get rewards as a consequence of that status. And seeing that people who engage in changing their behaviors experience dramatically lower healthcare claims and life insurance claims, so lower mortality and morbidity. That creates surplus for us that we can reinvest in incentives to encourage further healthy behavior. And what started out as a simple idea, encouraging our health insurance members to go to the gym, has turned into an entire business methodology and one that we've taken out of South Africa and into other markets around the world.
And what particular role do technology, data, connected devices play in the whole vitality concept?
So I think we found that our model is very responsive to a number of trends in society. One of them is the nature of risk, that most personal insurance risk these days is about behavior. And that's something that the model is quite robust to and responsive to. The other, I'd say, is a social trend towards social responsibility and an expectation that institutions in the 21st century should have a purpose and not act just for profit. And the third is technology. So the model wasn't created out of technology or because of technology, but it's been highly responsive to improvements in technology. And it's something that we almost harness into the vitality system as a way of improving it and making it better. So obviously the explosion of wearable tech has been great for the model. It's meant that instead of just incentivizing people to go to the gym, we can monitor people's physical activity in almost real time, and they can track that, they can visualize that on a digital app, and they can experience rewards on a more real-time basis. So I think technology has been a powerful enabler and booster of the model, even though it wasn't the original reason for being of the vitality model.
So when I look at your model and how it must have grown over the past few years, it's about increasing the number of customers, of course.
Yes.
Increasing the adoption of the technology and increasing the usage of actually using that technology.
Yes.
And even the partners, of course. All those partners that you have on board, you need to scale on that dimension as well.
Yes, yes.
What were the key learnings when you look at those various dimensions of scaling things?
I think you described the categories very well. It's kind of a partner network that now has global reach. We have partners like Apple and Starbucks that we use in multiple geographies and are global partners. Obviously, a data set that's grown with time. I think we now have something like 35 million life years of data to demonstrate the efficacy of the model and to create toolkits to create products in new geographies. And technology being crossing borders means we're not very reliant on a particular gym network or a particular set of circumstances in an individual country. And then finally, the way we design products, I think now has a repeatable feel to it. What we do in one country can easily be translated into another geography or into another market. But I suppose putting all of that together was this insight that in order to scale, we needed a repeatable model. So we needed a technology platform that was a kind of a vitality plug-and-play solution that we could take to new partners. Very relevant here in Europe is Generali, that has a Generali Vitality platform. Make that available to them and enable them to plug that into their insurance products and to transform those offerings.
So that's sort of a plug-and-play platform. You mentioned also tools.
Yes.
Are there specific elements that you think are important to scale?
So I think the product methodologies those are things that are probably, local adaptation is obviously something that we never forget. There are different products, different distribution channels, different cultures. So what the program looks like in China is quite different from what it looks like in the UK. But I think the fundamental philosophies are the same. So those toolkits are things that are common across markets. And then the layer of local adaptation is saying, well, exactly what kind of product suite do you have in a market where we're looking to partner with an established insurer, and then figuring out which way we apply the vitality model. So I'll give you we have a rule of thumb. It's called 15-5-2, which means that for a whole of life insurance product, it means we can give a 15% discount to the initial premium. People's premiums will never go more than 5% above their starting premium, and the maximum change each year as a result of health engagement is 2%. So that's a kind of I guess it's a rule of thumb. It's something that we can validate using our data, and that applies across geographies wherever we are integrating vitality with a whole of life insurance product.
When we discuss the business model of vitality with insurance executives, there is always some discussion or debate about what is the core of your business model. Is it like contact frequency resulting in better retention, which could be an excellent business case in itself, or more sophisticated data that would lead to different actuarial models. So when you're here on stage anyway, what is exactly?
So I suppose what drives a lot of insurance executives is value of new business.
Yes.
And that, and we've set out try to codify the way we measure the value that we create through the Vitality program. And now it's not just about profits to the insurer. I think the beauty of the model is that it's a virtuous cycle. If we get better benefits, but we can pass on incentives to members, we can share some of that surplus, and society benefits in the process. So we set out to measure that value per member, and that's a function of the incentives we give to the member, the behavior change that the incentives drive, the change in morbidity and mortality as a result of that behavior change, and that results in value uplift. And the value is value to the member in the incentives they receive, value to us as the insurer, and productivity gains across society. So we've set out to codify that and then to try and quantify each of those effects. And I think it's that data set and that codification that makes the repeatability of the model and communication to new partners and in new markets a lot easier.
I can imagine, because this is like a next level of behavioral science also in insurance, which you do not see too often. This is really one of the first that you really see at scale. Is it difficult to convince your partners that this is the way forward, looking at how insurance industry has developed over the last 100 years?
Yeah. I mean, it is, when we get into talking about the behavioral economics and the data and the science, it's esoteric. I mean, this is stuff that's exciting for actuaries and insurance executives, but not necessarily for everyone. But I think the intuition, the idea that, of course, insurers should try and get people to behave better. We should get them to try and drive better. We should get them to save more, save longer, and we should get them to look after their health. Because we know that we tend to make mistakes when we do those things ourselves. I think because the intuition is so strong, it's actually a very easy conversation.
Can I invite you to add something to what we just discussed?
I think I was going to draw a parallel with what was being said around the partnership model. I think the partnership model becomes a very important component here for the expansion, as I have seen on the AXA side, specifically as you're trying to address large communities, because many of these partners have already segmented, but the example might be slightly different with what you are looking with the partners definition. Where I have been focused on is really looking at partners in new emerging economies. So who could be a leading partner, for example, in ride sharing, in car sharing? You look at people doing home sharing, so on and so forth, and then a couple of other new digital platforms that are emerging, and I don't want to forget the social networks that are out there. And it becomes an interesting play, because how do you serve these communities? How do you address the needs of these communities, whether it be on the health side or on the non-health side? And you have to think about product simplicity and some of these other aspects that become, I think, in my view, very critical for customer adoption.
It's very cultural, very much looking for partners which play a pivotal role in some of the emerging markets.
Yes, not just in emerging markets, but also in mature markets,
yes.
I would say. But if you look at the approach that I have taken at AXA, is really that how could you use insurance, and AXA in particular with our global assets, to be a strategic growth lever for these platforms and for these companies. And therefore it becomes very, not a selling role, but essentially an approach where we are looking at an advisory role, because I need to help you disrupt your domain. And how do I help you do that? So if my discussions with BlaBlaCar are happening or Uber are happening, the approach is not to sell the next product. The approach is more in terms of saying, how do I help you disrupt your
Maybe you can explain a bit more about the things that you do with the likes of Uber, Alibaba, and BlaBlaCar.
So essentially what we are doing, is I look at these not as platforms. I look at it as communities, communities of people sharing assets, communities of people having certain kind of behaviors, communities of people who are actually looking at certain kind of a profile segmented behavior. And the platforms are a means to kind of address the needs of these communities. And if the company has a vision to move from peer to being partner in customers' life, I really need to go on everyday platforms and meet customers in everyday life platforms. Something very similar to what most of or many of you would know, how do credit card companies approach. It's a case of share of wallet. It's a case of meeting customers in everyday life moments. So as an insurance company, internally, that's the, I think I would say, the ongoing mission and the philosophy with which we are approaching. So yes, it could be an interesting thing to give a traditional product, but that really does not change the game here. And what really kind of changes the game here, I mean, similar to what you guys are doing on Vitality, is how do I meet and accompany the customer in everyday life moments? And if you think about it, you cannot meet your customers in everyday life moments if you're not able to design products that are simple to understand, simple for claims, simple for pricing, simple for risk.
So can you give us some concrete examples of the things that you actually do with, for instance, Uber or with Alibaba?
Yeah, so I think most of the people in the audience would understand you insure an asset, like a car. With Uber, you are looking at insuring or car sharing, for example, players like Social Car or Drivey or VCar. You are insuring the usage of the asset. I borrow your car for one day and that car is insured. With BlaBlaCar, it goes to the next level. The way I see it, I'm insuring the experience of usage of the asset. So I hail a ride from point A to point B with you, Roger, and the risk starts at 9 o'clock in the morning and finishes at 2 when you drop me off. And it's an interesting concept. Different markets in Europe pose different challenge. Sometimes the insurance policy is not complete, so there are loopholes. In many cases, there are new customer behaviors. What is the most common thing I can do when I do ride sharing? I might forget my mobile phone or my sunglasses, and it may have sentimental value. I would request you to FedEx me. Maybe you don't want to spend 25 euros out of your own pocket, but maybe what if the membership effect of this community could take care of it? And the idea is not to bring an insurance product just for the heck of it, but essentially looking at providing these solutions in an embedded manner, in an intuitive manner. And then if you think about ride sharing, the way I see the macro game happening is that it puts ride sharing at the same level as other channels or means of communication that you might take, such as bus or the train.
So this also requires that you team up with partners that are huge, because then that's the only way basically that you can achieve the size that you want to achieve.
Yes and no. Yes, I would early on evaluate whether these partners are on the verge of disrupting or on the verge of creating something big. So you can look at our association, for example, with BlaBlaCar, where they were 2 years ago and where they are today. It's been a win-win partnership. It's been mutually beneficial. We have been able to create huge trust with the community there. That's the essential currency we build for players such as these. And over the last 2 years, if you look at it, we must have insured something in the range of 16 to 18 million trips. So that covers about 30 to 40 million BlaBlaCar people doing ride sharing.
Yeah. So it's really also leveraging the scale that other ones have to create your own scale, creating network effects.
Creating a network effect, and yes, it does kind of create a network effect, but it also grows that community, grows the community, because platforms such as BlaBlaCar in the sharing economy, the trust is a currency here. And I see insurance to be the oil for this industry and for this segment to grow, really being an enabler to create the peace of mind and to create the trust to make these communities come together and kind of grow.
Looking at that perspective, are there any other platforms that are currently totally untapped that you think have a large potential for insurance?
Yeah, I think in general, there are platforms around us. So in mature markets, we can look at the payment platforms. I think pretty much everybody has a payment and a financial aspect, all of us. So these points could be these interfaces and these platforms, philosophically speaking, could be a very good way for me to be served by insurance that could take care of all my needs. But then there are also opportunities in emerging markets. For example, in India, the government has been pushing a lot of initiatives around unified payment interfaces, unified interfaces around merchants, whereby you could be, today people, whether you know to read or write, you could be exchanging money by sending a text message or emails. So if you want to have your banking license, you need to have some of these minimum protocols to be able to interoperate between your peer banks. And then you think about X percentage of people living in the villages, not having credit card, how do you make payment, how do you enable payment? So with the new policies and new infrastructure that is being laid out, the future is that you could pretty much go and punch in your national ID, scan your fingerprint and make a payment. And these platforms, if you think about the market that is available, provides a immense opportunity for insurance companies to really bring the underserved and the non-served in the society and the markets into the fold.
Yeah. So it basically, just with your fingerprint, you're able to access all sorts of financial services, primarily focused on banking, but of course this could be expanded to insurance as well.
That will be the future. That's the future. But if you're thinking about a future where in 18, 24 months you're able to enable those kind of financial services, I think from an insurance perspective, we also need to be prepared about what kind of products we are talking about. Are these products embedded? Are these opt-in? What are the customer needs? The need of somebody living in the rural market is very different versus the people living in the cities, and so on and so forth. So I think there is some time before insurance companies would also understand the market and the segments there.
Mm-hmm. And I think that Apple launched something in payments a little while ago. Is this something that's on your agenda as well then?
It is, actually. We were talking backstage that one of the emails that I sent to the tech roadmap crew was Apple Payment, put it on the list, and it goes along with the way that we look at payments. I want to make it as easy as possible for as many people as possible to pay us in as many different ways as possible. So if that's Venmo, PayPal, Apple Pay, it's here to stay. So obviously, as more insurance product becomes digital and mobile-based and app-based, and we're communicating with potential insureds or current insureds on those devices, we need to be tapping into those payment systems. So it's absolutely on the roadmap, but it's still new. It's one of those things that I think it'll take time until it has this B2B, commercial application, but it's something that I don't think you can ignore it.
Amtrust is a company that is very successful in integrating Insurtech in its primary business. Can you give some concrete examples of things that you've managed to scale?
So it's interesting, thinking about, looking out and looking at the audience and just segmenting and bucketing the different types of people that are here, and the change that's going on in our industry. It's remarkable if you think back from a technology perspective, and I'm relatively new to the industry, but how much things have changed in the past 12 months and 24 months. It's really quite remarkable. So from our perspective, we look at it from a multiple different ways, but as a company, as a carrier, we have so many different channels and ways in which we conduct business. We have distribution, then we have claims, and then we have premium audit, and you have underwriting, and you have first notice of loss and loss control. And we can go through 18, 20 different vertical practical applications within an insurance company, and then I guarantee you within the audience there is somebody who's figured out a better way to do it than a stodgy insurance company could do it, because however innovative we are and however much we do spend on technology to maintain enterprise level systems, it's like the Apple economy, the marketplace. Apple decided a long time ago that they can't possibly build every single app. They can't build the stock app and the weather app and the ride-sharing app. They opened it up to the community, and here's the community. And so for us, we want to make sure that we could bring the best partners, the best practice technologies, the people that have figured out a very specific niche, and how to integrate them into our system, and then also how to do that in scale, which I think is the challenge.
But what are the most important barriers at most insurance incumbents to actually move in that direction?
So I think you have your internal barriers. Again, as a non-insurance person and somebody who's been in the digital media world, and I use the word agile, to talk about speed, not as a programming scrum. Agility is very hard. You have, especially when we're a pretty sizable company. We have quite a few engineers on staff, and there are processes and protocols. But if I meet a fabulous company here, I want to be live in 30 days. How do I make that happen? How do we avoid a steering committee? How do we avoid all these bureaucratic processes to make it easy for the talented, capable, awesome technologies that are here and benefit from what we have to offer? Because at the end, and I think it's changing too, but if you think back a couple of years ago, as a carrier with paper, you were really the only game in town. You had your different levels of distribution, but if we wanted to have a claims technology, it had to be the way that we did it. But I think now there really is disruption in the sense that look at all the different distribution players that are out there that are either becoming MGAs or setting up fronting companies, however they do it, where they bring their process to bear and we need to tap into it.
But what is it then? Is it bureaucracy? Is it not invented here? Is it obsolete systems? Is it budget issues? What are the main hurdles on the internal side?
So I think it's like everything. I think you could break, I don't like to talk in absolutes where it's everyone's going to like this platform or no one's going to like this or everyone's going to adopt usage-based. And so to answer the question, as we go and we march, and one of the things that we're really looking to do, and we're putting a lot of effort and energy, and we're big fans of your show, but I'll give you an example, and just kind of like a shameless plug, but an independent company here, a company called Verishow, they have this video chat collaboration. It's new. We brought them in as a proof of concept. One of the things that, the questions that you and I discussed, like what can a startup Insurtech do to interact with a carrier? It's figure out a very efficient, cost-efficient way to get a proof of concept done, because I hate to say it, and it sounds a little obnoxious, but when we go in as a buyer and people look at a large carrier with a sizable balance sheet, everybody adds a zero to the cost of a POC. And what they don't recognize is that we're evaluating 200 POCs at any one given moment in time. So, this other company that we work with, they came up with, I happen to love the video chat engagement. Will everybody want to interact that way? No, but from a marketing perspective, from an adoption, conversion perspective, if I can get 2% of whether they're my quotes, whether they're my leads, whether they're my insureds, whether they're my claimants, interacting using this new technology, it's a success, but the challenge is, okay, we got it working in the distribution sales arm, how do we then get the claims team on board? How do we get the underwriting team to use it? And every organization has its own separate fiefdom, and the challenge is to create this one overarching, technologically friendly way of getting the Insurtechs into a legacy carrier.
So just like Vitality has sort of an infrastructure that can be replicated across various geographies, you actually have sort of an infrastructure in place to adopt Insurtechs at a fast pace.
So we do, but it's quite young. We're building it right now. We're learning every single day. Every new integration that we do, we learn a little bit more, and as we get into a different vertical, something that's relevant to underwriting now became relevant to claims. One of the huge challenges are data dictionaries. Something that is relevant to claims, and the data set that is relevant over there is very different than an integration with a distribution partner. Loss runs, whatever it may be, they're relevant in one spot but not in another. But we're really making a very concerted effort, and we're unifying all the different international offices that we have. We set up an innovation lab, and I know that's a broad generic term, but there is a very strong charter from the top down to make sure that we're meeting with the best and brightest companies, and we're figuring out a way to get them live, get them integrated, and take advantage of the really smart, capable, talented people in tech that are here.
And when you mention top-down, to what extent is it really already part of the culture of the whole organization to really embrace Insurtech? And
so there's a definite battle between theoretically and realistically. That anybody wants to hear a dirty joke, I'll tell you after. Remind me about theoretically and realistically. I'll tell you off stage. But it's a constant battle between theoretically and realistically. Theoretically, yeah, let's integrate and let's go live with everyone. And I met this great company. Why is it taking more than 30 days? But then you get back to New York on Monday, and I got to get this compliance sign off on it.
And how do you solve that?
I don't know. I have a quote saved on my phone. It's just hard to beat somebody who doesn't give up. This is important. This is my job, and if I have a good partner that I want live, we foster it and we bring them in. We introduce them to the right people, and then it's about establishing. Once you have the data, once you have a case study. Everything is supported by analytics, and once you have the analytics, it's very tough to argue. Whether it's a user experience platform that we're integrating. The technology and the tools are so powerful, and the supporting analytics they tell a very compelling story, and we're day by day building up, and we're committed to it.
And of course, on the other side, there are Insurtechs, and they must be also aware that they need to be proactive as well and anticipate also the challenges that you face internally. How should they also prepare to make your work more easy?
So, starting at and I hate the word journey, but there's no better alternative, it's only maybe life cycle, but starting, in the journey of an Insurtech trying to integrate with us. So if I met somebody here for the first time, what I often say is, and I heard this about sales, that generically, the average sale takes place on the 5th attempt, but the average salesperson doesn't try more than 3 times. We're busy. Whether it's because of LinkedIn or because of our presence at DIA, we get a lot of applications and RFPs and people that want to work with us, and there's a lot of noise out there. So the people that are consistent and persistent, I think that's very important. And then I think there needs to be a very set framework, and they have to recognize that while a lot of these Insurtechs are startups, and they're all looking to make a dollar, but every carrier we're evaluating multiple at a time, and we have a budget, and we can only handle so many at a certain point, and to make sure that you have the infrastructure to deal with our infrastructure, because it's not just CEO talking to CEO and saying, let's have a hackathon and figure it out. That's not how we're able to work. I don't know if you do it differently. I was actually asking Vikas for advice on how he does it. I want to learn, because we're growing every day.
So, Vikas.
There is no denying the fact that there is a change management piece that is involved here, and therefore the role that I see for me and myself, and for myself and my team, is really around that being of a rainmaker. You need to translate what the market is telling you for the internal organization and what the internal organization is saying for the market. Somewhere you need to play the rainmaker here. But the large part of it is also, I think, when you do the first thing, I think you set a precedent here. And my personal experience has been a lot of legitimacy in the marketplace, but also internally, as we built the first partnership around BlaBlaCar. It gave the organization a confidence that they could innovate. It gave the market the confidence that, yes, we could go into innovative partners such as BlaBlaCar and kind of accompany them with absolutely out-of-the-box product ideas.
You're dealing with the same issue also in so many different geographies.
Absolutely, and looking for new tech partners who can enhance the proposition. And I think the ability to pilot and to prototype and do that rapidly in a safe space is critical to getting adoption and getting some of these things off the ground.
Room for experimentation.
Absolutely.
That's where it starts.
Absolutely.
But how do you create room for scaling?
Room for scale.
Yeah.
I guess if something's successful and you can deploy it on a platform that is scalable, so if the product itself or the partnership itself with the technology player is something that can cross boundaries, and we can plug it into our platform, then it's, I think, just the way we've built that out, I think it makes it scalable.
I also think just knowing that scale is part of the equation, I think everything that we do, we have in mind that this has to scale. So if we've never done a new black box quantitative partnership, but we're bringing it in for the first time, we're figuring it out as we go within that specific vertical, but we know that however we build it, whatever framework we use, we know that we have to be able to replicate that times 10, 100, 1,000, because we do know that scale is part of the ultimate equation.
Well, I think that during what we just discussed, I noted a few things that sort of may prove like instruments to create that scale. I learned codify things, create plug-and-play tools, infrastructure, also team up with partners that you can actually use to create even more scale, create network effects. I think something that people are not usually aware of. Take a very systematic approach and see how you can integrate things in the journeys of your partners, for instance. And also on the internal side, create a real infrastructure to make sure that you integrate things fast, starting from the stage of exploration, minimal viable products, towards actually scaling things throughout your internal process. Would that be something like a summary of what we just discussed?
I think so, absolutely. Yeah.
Then let's call it a day. Thank you very much for your contribution.
Thank you.
Thank you.